Yeah, hi everyone. Good evening. I will request you to stay tuned. Upcoming 10 minutes will give you some realization that how come the momentum midcap will help you to financial freedom and financial security. Yeah, most of the question comes, is there any better solution than what existing funds we have? We have risk-taking capability. We can stay in the market for more than 3 years, 5 years. Can you suggest good funds? Okay, so this is the best solution. If you are a moderate investor and you are aware about market up and downs and you are okay with market fluctuations, market volatility, then this can be one of the best fund for you. Okay, if you have a long horizon, this can be one of the best fund for you. Those look for the momentum, those who want to build their corpus very fast at the speed, this will be the best friend. So stay invested for next 5 to 10 minutes. I will try to cover up most of the important things as a momentum index fund. Okay, so let's get started. So this is the new NFO, new fund offerings from the Motilal Oswal, that is midcap 150 BSE indices, choosing 30 companies from the BSE midcap momentum fund. Okay. So let's get started. So yeah, let me check something is not working, but I will check. Okay, so I need to switch between laser and not laser. Opportunity is abundant, selection is everything. So let's understand this very clearly. Like we have large cap, mid cap, and small caps are the three major sectors once it comes to the categorized based on the company's overall fund size or the companies caps. And if you can see here clearly, like large caps are doing good, mostly stable companies which has very good projections. They are giving like 5 year CAGR around 11%, 5 year volatility 13.97. Mid cap classification, the next 101 to 250 companies, and company age blend of stability and growth. 5 year average returns are 17.31 with a volatility of 16.97. Small caps are the companies that are ranked from 250 onwards, and these are considered to be the emerging companies, happening companies. Their 5 year CAGR comes to be 16.15 and volatility are 18.20. So considering the risk to reward, midcap is providing one of the best sweet spot, right? Till now you are following me. So this is the best risk reward. Mid cap advantage in action. So higher return than large cap. We if you stay invested for more than 5 years, that is more than 7 years, we will never see any negative returns. If you have horizon to stick to the plan for more than 7 years, you will get a very good return. Positive years since 2006. Out of 20 years, 16 years, it has shown consistent positive. There are 4 years where the year-on-year returns were negative, but out of 20 years, 16 years, it has shown year-to-year positive. Not all mid caps deliver the same outcome. So that we know, like in the bucket of mid cap, we have 101 to 250. There are some will perform at a very good space, some will stagnate, and some we may not perform. So, like top three stocks gave more than 50% return in last year, and bottom three stock gave around less than loss close to 50%. Momentum investing, a systematic way to navigate market. So, what the basis of momentum? The stocks which are in momentum, there is inherent inertia, and that is where high probability that momentum will remain intact, right? So that's how the stocks going up will continue going up. That is the thing, and in vice versa, like once that momentum is loose, then it's possibility that it can build a negative momentum, and prices may go down, and it can fall sharply. So that is also a momentum. So if price follows the momentum, that is called as the momentum stocks, and we are here to trade with the price trends. And one of the, yeah, as we go along, it's a rule-based trading. Okay, it is not biased trading. Generally, fund managers come up with their fund buckets, but it is when we consider as a factor trading, it is a rule-based trading. So identifying momentum, when to enter, when to exit is based on rule-based trading. So next is mid-cap plus momentum, where growth meets conviction. So if you see here, large cap alpha, everyone is looking for alpha, right? If sector or the indices gives average return, what additional I can generate, right? Everyone is here to see that what additional. So large cap can give you around 12.8%, mid cap with smaller companies to grow. So if you can have a mid cap, and if you choose BSE 150 mid cap index, then there is a probability of you can have that additional 3 to 4, 3.5%, so that it can grow up to 16.2, right? In the similar way, we choose mid cap plus winning stocks continue to outperform. You can able to generate 26%, 26.6% of returns. So that is where you want to generate alpha compared to the existing benchmark set by the indices, then we will have to go with some additional flavors. That is, if we can choose smaller companies which grow faster, you will get around 3.5% alpha. And if you choose winning stocks that will outperform, you can hit around 26.6%, right? So here also among different markets, yes, segments, momentum has delivered better performance when it applied in mid-cap segment. Okay. While mid-cap index delivers 16.2% momentum, outperform all other factor strategies with mid-cap inverse. So this is, you can see 5 years rolling returns. What is mean by rolling return? I do have covered this in the previous sections, and I will give link below. But here you can clearly see like uh, mid-cap PRI is based on 150. Mid-cap momentum can give you 26% volatility, value, and quality. There are four primary factors when we consider selecting the stocks: momentum, low volatility, mid-cap value, and quality. Momentum, low volatility, value, and quality. So considering these factors, momentum is the best when you have longer horizon. Not all mid-cap momentum indices are built the same, right? If you see like Nifty mid-cap and 150 mid-cap, Nifty mid-cap is rebalanced semi-annually, BSE mid-cap rebalanced quarterly. BSE mid-cap 150 index is constitute of 30 stocks. Nifty mid-cap 150 momentum 50 TRI is constitute of 50 indices. 12-month price return adjusted for volatility 6, and 12-month price return adjusted for volatility. Buffer is 30%, buffer is 50%. Quarterly rebalancing changes what you own and when. So if you see, one of the major differences, BSC 150 30 TRI, it's quarterly rebalancing. Okay, so that is where it continues to pick up new leaders every quarter, not waiting for 6 months. Adapt faster, exist weakening stocks. Okay, so that is the advantage of quarterly selection. And instead of going for 50 stocks, we are choosing top 30 performing stock designed for focused momentum exposure. So that is another advantage we are getting here. BSE Midcap 150 Momentum 30 has historically generated meaningful excess return over 150 Midcap Nifty Midcap 150 Momentum. So that is what we have tried to highlight, like how the BSE 150 30 TRI and Nifty 150 50 TRI. So if you see like over the 10 years, BSE Midcap has given better return compared to the Nifty, and even for 50 years, it has given better returns. And with respect to volatility also, it has generated better return compared to Nifty Midcap 50 TRI. So what is strategy behind Motilal Oswal BSE Midcap 30 indices? So strategically, uh, there will be selection of 150 midcap companies from BSE, listing history of 1 year traded on all working days. Turnover ratio should be more than 20. So that is the first eligibility. Then momentum score 12-month price return adjusted for volatility. That is the primary momentum score. 12-month price return adjusted for volatility. Whatever the volatility in the market, 12 months returns are always positive. And these companies has free float market and 5% individual stock cap and reconstitution quarterly. So this is like selecting 30 stocks criteria currently as part of BSE mid cap. The Motilal Oswal selection is like this. And if you can go and search on the internet, you will find that all these stocks are giving very good returns in last 1 year, 2 year, 3 years, right? So based on their model of selecting stock, these stocks looks to be very promising. So I would request you to go and visit and analyze this stock. These stocks are giving very consistent performance this last 1 year, 2 year, 3 years. Yeah, so again, sector-wise, Bharat Forge, Bharat Heavy Electricals Limited, Lawrence Lab, Federal Bank, AU Small Finance, Hitachi Energy, MCX, GE Varona, CG Power, National Aluminum Co. Limited. If you go and divide into sectors, financial is doing around 30%, industrial, healthcare, and commodities. So these are the primary sector, and as we are gonna have the rebalancing every quarter. So we'll keep track of how the sectors are performing monthly basis. So here you can clearly see industrial sector was doing good in 2024 March. Now it's not in case of March 2025. It's a consumer, right? And consumer is no more as part of 2026. 2026, it's financial. So that is where we have to understand this psychology of the human being. The sectors keep changing every year. So one of the best factor of this momentum is that the portfolio does not tie to one sector. It keeps rotating towards sector showing strong leadership. So as we have seen, like every quarter we are gonna rebalance. So if you are rebalancing on timely basis and going to choose stocks with the momentum, it will choose stocks in the appropriate sector where there will be momentum. Okay, so in case of 2024, if the industrial sector is performing, most of the weightage will be given to industrial stocks. Consumer in case of 2025, and now in 2026, as financial sector looks to be booming, the more weightage will be given to the financial services. That is where the selection will be. I hope this understood. If any questions, please feel free to ask. So this is a comparison like Nifty 50 index, BSE Nifty 50 midcap, and then 30 focus stocks out of BSE Mid 150. And these 30 focus scripts are based on momentum rules, selected based on momentum rules. So you can clearly see the differences lies in the returns, right? And as you know, like past performance does not give the guarantee of future. This is for your reference, and you will have to consult with your advisor before taking any decisions. No doubt these numbers are looking very lucrative, but at the same time, you will have to understand your personal financial health before choosing and going into this segment. This segment does suggest, I will show you, very good returns, but at the same time, it has associated risk. So if you can stay invested in the momentum stock for a couple of years, you could easily see the CAGR is 25.1%. What does it mean? Rule of 72. If you divide CAGR 72 by CAGR, you will get number of years and the money can double. Right? So with 25.1%, there is high probability that your money can double within 3 years. Right? That is awesome, right? Everybody would like and go with such kind of products. So suggestion is that study it appropriately, understand the risk, and then choose the product. Here, this is one of the good slide, and I would like to give everyone another side of the coin. Like when you choose a product where you expect high returns, there is associated risk. And what is the risk in case of equity markets or in case of equity-based fund? The market is volatile and funds has to adopt and adjust to the market volatility. And it takes time because some events are uncertain, unplanned, right? So here you can see 2007, 2008, it was one of the bankruptcy in most of the states, and that's where it was a financial crisis across globe. Indices came up to 60% negative. At that time, this momentum index or the mid cap index was almost 70% negative, right? And it took around 2 to 3 years to bring back to the same level, right? From 2008 to 2014. So it's like 3 years time frame where it took time to come to the same level and then build momentum, right? So, and in again towards COVID, it was almost 40-45% negative. So there is possibility that you may see fund value negative for a few months. If you have patience and the conviction, market will come back and you will get positive returns over the period of time, then only come and invest into such products. Is my humble request, right? That is very much I wanted to cover. And why this fund lastly? Capture growth potential in midcap. Momentum identifies and retain leaders. Quarterly rebalancing tracks evolving leader. Focus 30 stock high conviction portfolio. Right? So with this, keep in mind that with high returns, there is some associated risk. You will have to analyze and discuss with your financial advisor and do an analysis like what is your financial status now, how much associated risk you can easily afford, and what is your mindset about it, and then go for this product. This is one of the awesome product if you want to build momentum and if you want to chase or if you want to gain very good returns in short period of time. So if you have a little and more risk-taking ability or staying invested into market for long horizon, staying invested into market without thinking much and only knowing that with a great conviction that market will perform. So this will be the best and the one of the best product for you. If any questions, please feel free to post your questions below. Me and my team will able to answer these questions. Thank you for watching me. Have a great, wonderful day ahead. Thank you.